The recording has started. Welcome at the iMarkets Live Harmonic Scanner training of Monday, 27 August. We are going over the Harmonic Scanner software today. This webinar is in English. I also have a Dutch version. So just Google it or search it on YouTube. IML Harmonic Scanner 27 August Dutch or Nederlands. And you will be able to find that one later. So I'm just logged into the Harmonic Scanner. The website link is imlharmonicscanner.com. If you are an active student of us, I can advise you to do that yourself as well. And to actually do that every day, every working day, because the Harmonic Scanner is looking 24 hours per day, 5 days a week, looking for new harmonic patterns for us. And this is why it's possible to trade part-time. So basically what we have here is the latest pattern. So after logging in, you will be able to see the latest pattern, which here is the hot Forex pattern. So it's a pattern that's found by hot Forex. And it's the Euro Japanese yen, and it's found on the 1 hour. So let me just clear all the drawings. So basically here you are able to see which broker is used, Euro Japanese yen, found on the 1 hour pattern, and it is a shark pattern. So the Harmonic Scanner finds all these different patterns. We have butterfly patterns, shark patterns, crab patterns, reversed crabs, everything. So here you see shark, Gartley, butterfly, there's all different alternate, but there's all kind of different patterns. So you can learn more about those patterns in the iMarkets Live Academy. And there's a separate section called Harmonics, where you're actually able to learn about how those patterns exist, why they are there, and what do they do, and how they are found. Now, it's very hard to find them with the naked eye. So that's the reason we have the Harmonic Scanner here. So the Harmonic Scanner itself comes basically with a few functions. It will always open the RSI, a relative strength index indicator, as a second form of extra confirmation. Also, it will give you an advisable stop loss, one or multiple entry points, and take profit 1, 2, and 3. So basically, what we see is that the take profit 1, 2, and 3 are made based on support resistance levels and about support resistance levels and Fibonacci levels, and a stop loss is a certain level of maximum drawdown. So what we see here is this is a very new pattern, and what I like to do is I'm adding at least one indicator more, and it's kind of an important indicator for me. It's called the Bollinger Bands. So you go to this button here, which is saying indicators. You can add all kinds of indicators, what you like to get extra confirmations from, and I'm adding the Bollinger Bands. Now for this strategy, I leave the settings standard 20:2, and I just want to give you a couple of examples how I use this. So basically, we also have the RSI. RSI 14 is nice for especially the 4 hours. I actually, for 1 hour and 15 minutes, I like to make it a little bit shorter. So I put it on 7. Very important is to move the to click on defaults and then save as default, so that when you switch to another pattern, you actually get the same setting. So I also do that on the Bollinger Bands, and now I will show you if I move to another pattern that I actually get my Bollinger Bands and my RSI. So let's start with this one, because I want to explain the Bollinger Bands first. So what you saw me doing is I'm going to this broker. There's different brokers. We removed the names because that really doesn't matter. People think you need like an account at every broker for the different patterns. That's not true. the reason that we use those different brokers is because the brokers give us a certain amount of data. They give us their current price, they give us their history. Basically, for the technical guys, it's we get an open API with them. Means that we can read their graphs, we can read their history data, and this is how the Harmonic Scanner is able to make the patterns in the first place. So which brokers it is, it doesn't really matter. Only thing what I can tell you is that on the first one, which is the data from Hot Forex, you are maybe able to find a Bitcoin trade. So sometimes it's there, sometimes it's not there. Today it's not. So if you see a BTC USD, it's the Bitcoin against the dollar, and it's only to be found at Hot Forex. Another thing is that if you want to trade gold or silver, it's mostly found on this one. And I think it's Trader's Way, if I remember the logo correctly. And here you see a XAU USD, which is gold, and XAG USD is silver. So if you want to trade silver or gold harmonic patterns, you probably will find them here. Actually, there are two new brokers. I don't know if they have a specialty at the moment. I didn't see anything super special. I just saw the FX Choice. It's a huge broker that I'm very happy they added for very good data. And this one is the last one. I remember their name. It's GBAE. But basically, they also just have a lot of different currencies. I don't see any specialties here. So if you have a broker from this list, let's say you're on XM, I can advise you to just go over the 15 minutes of XM and then the 1 hour, 4 hour and daily harmonic patterns from XM, because actually the price of this trade, if I'm going to this trade, Australian New Zealand dollar, then you see here on the right, you see the price 1.09723. That is the actual price at XM at this very moment. So if you're on another broker, you maybe see a couple of pips difference. So if you are on one of those brokers, just go over the list of that broker first. The reason that the other brokers are there is that maybe this broker found something on Australian dollar, New Zealand dollar, and the other brokers don't. There's a different amount, there's different spikes, there's different, you see this one is definitely created because there was a spike here on point X. If that spike of this candle is not there, if this wick was not so long, this Gartley pattern was probably not there because it didn't match all the criteria for the Gartley pattern. So this spike can be created just on XM and not on the other brokers. So some people really like to check if the pattern is there on multiple brokers as kind of multiple confirmations. So that's really good. You can use it for that. You can use it just to take the trades from your own broker. You can take the trades from all the brokers. That's all up to you. So basically it just means that we have multiple data locations, and when there's an error and XM doesn't show any new trades, you always have the choice for the other ones. So that's just an example. So I changed the RSI to 7, basically for the trades that are found on 15 minutes and 1 hour. And I can advise you, if you are a beginner, to also start with the 15 minutes and the 1 hour trades. So they're always from new till old. So if you start at the top, the chances that you find a fresh pattern, as we see here, is very big. Now, what's a fresh pattern? It means that it's just found and there's not a lot of history behind the end of the pattern. If I open an older pattern, then you will probably see that this is not a fresh pattern. So if we zoom out, I actually need to still zoom out. Point D is when the pattern was found. It went to take profit 1, it went to take profit 2, then it went back up, and there's so much history behind this already. Look, later it went actually to take profit 3, then it went even further and further and further down. You see this pattern is not fresh at all. It was on the bottom of the list. So there's so much data after this. I keep scrolling, so here's the end. So basically, you want to go from top to bottom of the list and you want to look for the fresh patterns. Patterns that never hit take profit 2. If you want to have an easy answer, like I would never trade something that hit take profit 2. Maybe if it goes all the way back here and it has chances to go down again, meeting my other criteria, okay. If you are a beginner, just when it hits take profit 1, 2 times, or it has hit take profit 2, don't take that trade anymore. There's more than enough harmonic patterns. You don't have to take all of them. Quality over quantity, we always say in trading. So you start on the top and you just search for the new patterns. This is a beautiful new pattern. Now there's a couple of things. I added Bollinger Bands, and the reason I added Bollinger Bands is because I want to determine my own take profit, and I want to be able to determine maybe my own stop loss as well. So what I see here is that the Bollinger Bands will be able to make this trade go down, and maybe Bollinger Bands will move with it, making it able to go to take profit 2. In my opinion, I'm taking the trades only when they are inside the Bollinger Bands, that they were oversold before on RSI, or at this moment oversold, so this one is now kind of already dropping, and I want them to go to maximum the current level of the Bollinger Bands, which in this case is just take profit 1 and a little bit. Sometimes it's take profit 2, a lot of times we see kind of this level, which is take profit 2 and a little bit. Take profit 3 is a very hard point to reach for harmonic patterns, or you just need to have a lot of patience. The cool thing is that when a trade is in plus, and it's big in plus, you can make it a so-called risk-free trade. So you make it a risk-free trade by putting your stop loss in a little bit of profit, or just at 0, just at your entry price, and you can enjoy the free ride to take profit 3. If it's at take profit 2, you maybe move your stop loss a little bit down, in this case with the sell, to take profit 1. If it's like after that and it's on take profit 2, if it goes to the direction of take profit 3, you maybe move your stop loss again a little bit more into plus, so that when the trade goes backwards, you actually get stopped out on your stop loss, but your stop loss in this case is a profit amount. So there are a lot of people going for take profit 3. In my case, I would put a short-term trade on this level, the end of the Bollinger Bands, or I would put it on this level, which is kind of a support resistance level from before, which is the Bollinger Bands bottom. So this is just an example together with RSI. Let me take one more example. And I also see that there is some chat questions. I will check if I can answer that directly. So what's the percentage of success in trading harmonics? The percentage of success going with harmonics patterns together with extra confirmations like Bollinger Bands, RSI, and I'm going to show Stochastic as well, is statistically 80%. This is very, very high. The point is that the amount of trades that actually comes to the whole take profit 3 level, which is the bottom of the pattern mostly, that's maybe just like 60% or less. So take profit 3 is not advisable. I personally advise the bottom of Bollinger Bands 20. So you just see here, the trade is starting to go down. It was oversold on RSI. It starts to go down, and my take profit would be 142,895, the bottom of Bollinger Bands 20. It's a little bit more than 1, it's not yet 2. This is not a lot of pips. Why not? Because we are on the 15-minute chart. So this is like 26 pips, still nice for a 15-minute trade, 26 pips. So what's the difference on the trades? So the 15-minute trades take on average 20 times 15 minutes to complete. The 1 hour take 20 times 1 hour to complete, so 20 hours. The 4 hours take 20 times 4 hours to complete, and the day ones, they are taking 20 days to complete, so 20 times 1 day. So this is just like a fist rule. It's not official rule. It's just like for you to have an idea how long you're going to be in the trades. And that also means that the amount of pips is very different, because on a 15 minutes, you are maybe able, in this case, to take 26 pips, Sometimes you're having maybe 30, 40 pips, but that's kind of it. On the 1 hours, you will maybe go between 30 and 50, 60 pips. The 4 hours will reach maybe around 100, and the day ones can go into the hundreds of pips. You also need to wait 20 days to actually get those pips. And your drawdown is maybe a lot of pips more than your account is used to. So I would say, to get started, go for the 15 minutes and go for the 1 hour trades, because they are all doable also for small accounts. Take small lot sizes at the start, practice on your demo. If you are already on your real account and you practiced harmonics before, use the smallest lot size, 0.01, and just start to make the small pips. This would be €2.60 on 0.01 lot size. So actually that's just a really nice trade. So what would be my stop loss? So my stop loss actually would be never more than 2 to 1. So in this case, I would put a trade and I would put a short position. It's a sell because the pattern ends on the top and the take profits are lower. So this is a sell. I will put it at the current price. I will go for this level as a target. So I will just make it a little bit shorter. So my target here is 25 pips. So what I would add is, like, if my target is, let's say, 260 pips, my risk would be 130 maximum. So I want a risk-reward ratio of 2. And you see that this is actually, at this moment, on top of the Bollinger Bands, actually a little bit higher than the Bollinger Bands. So that's good. I always would check if it would be a little bit above the Bollinger Bands. It can spike out. If it doesn't hit my stop loss, it's good. The original stop loss is more made for trades going to really take profit too. So I would just always take your risk-reward ratio, check. You can even fill in the amounts of your account. So you say, like, okay, I have like a let's say €500 account or dollar account, and I want to risk 3%. So you see actually what are the amounts at the end of the trade. So what you're risking, and if this trade goes bad, you end up with €485, and if this trade goes right, you end up with 429. If your lot size is if your lot size is combined to 3% risk. So this is basically how it works, and this is how you can calculate your stop loss as well and your risk. I see one chat. Bollinger Bands values change in time. Doesn't you adjust to take profit levels? Yes. If I'm able to trade actively and the Bollinger Bands moves down in my direction, I will be able to go with my take profit to a lower level, which means that I can maybe go to this Bollinger Band level of like 2.5, like take profit 2, take profit 3, and I call this take profit 2.5. This is mostly where the Bollinger Bands are moving, and that's actually where my take profit mostly hits and then reverses. So not really going to take profit 3, which is the bottom of the pattern. So you are able to do that. If we are talking about hands-free trading that you do without managing it, just put the stop losses, just put the take profit. You have the numbers here. The numbers here on the right, the take profit in green, the stop loss in red. That's what it is. So if you want to take like a risk, like hands-free trading that you just do 30 minutes a day, which is what I actually do with a lot of my students. They just trade part-time, 30 minutes a day. They would make like, let's say on this €500 account, they would make €29, and that's it. And it's nice for a 15-minute trade. You don't have to wait more, like probably it will just be like 2-3 hours, and that's it. You make €30. So that's what we try to teach here, to trade part-time. If you trade full-time, if you have more time on your watch, or you're able to check the graphs every now and then, you will be maybe able to move your take profit together with the bottom of the Bollinger Bands. It will go there. And when it hits the bottom of the Bollinger Bands, it mostly reverses. So maybe we will see some trades that have some history that we are actually able to show this to you guys. So I hope this already gives you a basic overview. So 15 minutes, just go from top to bottom, go to the different trades, check if they are in the Bollinger Bands, if they were oversold. Now this one maybe has a little pullback. You can see that on RSI. And then you see here the take profit level of the moment of entry will be around this 2.5, take profit 2.5. So 74.15. So this is kind of where I want my trade to go. This will take not too long. You can kind of measure it because I always measure like going back to the level where it was before. So if I wanted to go to this level, I check, okay, this is where it hit that level, which was 16 bars in the past, which was 4 hours. So I kind of know that 4 hours in the future, that's around the time that it will take to actually fill up this pattern and to actually go to the profit level that I'm expecting. So then I can also calculate my stop loss, and in this case the stop loss that is suggested by Harmonic Scanner, a little bit outside of Bollinger Bands, is a pretty good one with more than a 2-to-1. Like this is probably a 1-to-3 risk ratio. So you make 3 times more than you're potentially losing. So this is a very nice trade. Looking to the amount that we are talking about, here we are still just on 20 pips. This is because we are still on 15 minutes. So 15 minutes are nice. Take the top couple of parts because they're probably fresh. If you go a little bit lower, you will probably see here they already hit take profit 3. The top of the Bollinger Bands here would be my take profit. So at entry level, I would actually go for this take profit level and I would just be out. This last spike you cannot predict. This is also 3 big spikes in just 45 minutes. So it can be news, it can be other things. For 15-minute Harmonic Scanner, if you're used to check the news before you're trading, do it. If you are not used to check the news before you're trading because you only trade long term, skip the 15 minutes because they can be having problems with the news because they are short term, they are just a couple of pips. So actually trade the 1 hours, and if you have a little bit bigger account, and I mean 500 plus, you can start trading the 4 hours as well. So that's kind of what you're looking for here. So this trade started at entry point, was undersold on RSI, and I would go to the top of the Bollinger Bands with hits 3 hours 15 minutes later with 38 pips. So that's kind of what we are looking at for harmonic patterns. So this is really cool. 15 minutes, short-term trading, doesn't even stay over, like big chance it doesn't stay overnight. If you feel it in the evening, maybe just like it will hit like the midnight swap, but it's not bad. It's mostly just a couple of cents. Good. Let's go for the 1 hour trades. So looking to the 1 hour trades, this is a very fresh one, top of the list. Here you actually have a point with Bollinger Bands that 20 can be too short. So you see here, beautiful oversold. It's really oversold. It's 83 on RSI. And what I'm going to do is I'm going to change 2 things. I would do Bollinger Bands. When I'm really trading long term, I would even put it at 70. Like 68 is like the sweet spot. You can put it somewhere in the middle, like between 70 and 20. So you can put it at 50, 45, 50 for 1 hour. So this is mostly where I want to have my first take profit. Of course, the pattern at the end is going to go where I want them to go. So I'm going to draw my own support resistance lines. I'm going to check, and if I'm going to the past, I'm checking here that I see here a very nice support resistance line. So I'm basically drawing in my own support resistance line, and my take profit will be a little bit above 20. Is there another support resistance line here? There is kind of a little one. It's here, it's point B, a little bit below point B. It hit here, it hit here, and it hit here, and it reversed here a little bit. Of course, I can go back in time to see if I can find this pattern. I can zoom out, keep zooming out, keep zooming out. It will give us data till a certain level of point. So here you see this, the support resistance line that I draw. It hits here as well. Of course, it hits at the bottom. That's why the pattern is created. And it will go back for a certain time, but not like forever on Harmonic Scanner. So then you need to check the pattern yourself on TradingView or on your MetaTrader account. So draw some support resistance levels for yourself, check where you actually want to go. And my first take profit will still be the bottom of Bollinger Bands 45 or the bottom of Bollinger Bands 50. Then my second take profit will be my self-chosen support resistance line. And maybe the last take profit 3 will actually be the bottom of the graph. So if it actually starts going there. Of course, here you use the same 2-to-1 risk-reward ratio. So if we are looking here to reaching this level, here we are seeing we are going for 150 pips. So it starts to be a little bit nicer amount of pips. We probably also need to wait a little bit longer for that. So this is where my goal would be. I edit it. I go to the coordinates. Here you see 150 pips. This is in points, so 1500 points. And my risk would be half of that. So you see, I would not use the original stop loss. I will be a little bit closer than that. It's way out of my Bollinger Bands. And then I zoom in. And I zoom in to check my current entry moment. And my entry moment is telling me that it's in the Bollinger Bands. So it's dropping already. I have the first candle in red. I would kind of wait 1 or 2. So 1-2 hours to see if it really starts dropping. Here on the right, you can also scroll down a little bit to make it a little bit smaller. And I would actually go for this trade. So it is a risk reward of 75 pips drawdown and 1500 pips, 150 pips profit. So here you see that when you are trading the bigger hourly time frames, that you cannot put the stop loss on 30 pips. If you want to go for 150 pips, don't put a risk reward ratio on 1-on-5 or something like that. Like kind of keep the risk reward on 1-on-2, maybe 1-on-3. I understand, like if you don't want to risk 75 pips, you need to start learn how to calculate your lot size, because you are going to calculate your lot size based on what your trade needs to get in space. If your trade needs 75 pip space, then just give them the 75 space and just trade a smaller lot size. So that's kind of how this works. That's basically how it works. So this one is with RSI, and what I will do is I will add one extra, which I really like. I really like to use Stochastic as well. So for Stochastic, I'm changing the levels a little bit. I'm mostly using 533. The smooth, I will show you, like this is of course a little bit bigger trade, so I need to zoom in. So I will show you what happens if you leave the smooth K on 1. It's a lot more like sharp edges. So the smooth K is like just a rounding form, and it's like less bumps in the road, let's say it like that. 5 is looking back to the last 5 candles, so 5 times 1 hour in this case. You can put it on 7 to look back for the same level as RSI. You will see that they have a lot in common. You can put it on 14 when you put your RSI on 14 as well, because that's for the longer term trade. So I would put it 14.33 for 4 hours and more. I will put it 7.33 or 5.33 for the still everything till 1 hour basically. And what I want to see is here, I want to see a cross. So here I just zoomed in on the Stochastic. You see the red line and the blue line are crossing each other. That means that the Stochastic is giving us the kind of green light for a sell. We had a oversold RSI. It's still oversold. It starts to go down. We have a cross. We have the first red candle. We need to really zoom in on this trade because it is a long trade, so you see a lot of little candles. So we want this candle to kind of close if the next one starts, and it will be a downwards candle. The cross will be even bigger. It will kind of be a confirmation. And now I have 3 confirmations. So actually I have 4. The first one, that it is an harmonic pattern from the start. The second one is that it went maybe a little bit out of the Bollinger Bands, or at least it's on top of the Bollinger Bands, but it's coming back in. So that's what I really want to see. The third confirmation is that I have my RSI oversold for a sell and undersold for a buy. So it needs to be under 30 and over 70. And I want my stochastic, this is confirmation 4, to cross to show me the new wave. And I want it to cross above 80 or under 20. So the crosses here in the middle, they don't count. I want it to cross on top, outside of this zone, or under the zone. And the zone in default is under 20 or over 80. Those things you can leave default. It's quite easy. So here I have my 4 confirmations to take a sell. So looking at how much time will it take to go 150 pips down, I'm scrolling back to the past. Where did it hit that level? It can hit, let me check, it can be hitting here, which is a 4-day pattern. A little bit longer is 4 days and 4 hours. So I kind of expect to use this trade for my take profit 1 to take 4 days. And one of the most important things is when I'm at least halfway into my trade, or maybe even a quarter. Like if I'm from 150 pips, if I'm like 25, 30, 40 pips in profit, I will move my stop loss to entry price. I will be happy with a break-even trade. The chance if this thing starts to fall is that it keeps falling. So when it is on plus 20 pips, just move your stop loss to break even. If it goes up 20 pips again, that's it. That just happens. So I'm just much more happy with a 0 trade than minus 75 pips. So get comfortable with break even exit moments that you are just saying like, okay, I was in profit. You have the chance to close it at that time, to say like, okay, it's 20, 30, 40 pips in profit and I'm happy with it, so I close it. Or I'm moving my stop loss to break even and I'm going for 150 pips. You calculated it, you worked for it, and this is where I would go for. And I'm okay with a break even entry. Even that I knew it was 20 pips in plus, I'm not making any losses, and I'm getting into profit. I'm having a break even, or I'm getting into maybe even 150 pips profit. And to be honest, when it's 11 o'clock in the evening, I'm choosing to go to bed. And at that moment, I see this kind of trades. They are expected to, let's say, be 150 pips, but I see them 135, 140. I'm more than happy to just close them. Close everything that's in plus when you want to. That's just my general advice. So I see a small question here. I see 2 entry points here. Why? So basically there's 2 entry points. They are based on different aspects of the pattern. So the shark pattern is kind of found twice. So you can see here that we have a point. It went up, it went down. So you can also say that the pattern is actually like this. What happened is that it had some drawdown, or like actually I should draw it correctly. I'm sorry. This one, leave it for there. Let's say point D was here. It doesn't let me actually. I hope you understand. So the point D was on this entry point. It had some drawdown. It came back. It had some drawdown again. And then this entry level is kind of the stop loss of this entry level, and it will start falling from that moment. So the software sometimes gives multiple entry points because the pattern is found twice, and you see point D is kind of stretching. So if it would go a little bit further up now, point D will stretch with it as well. if you would be in the first point, you would not be in loss, you would just be in a drawdown. Not all the trades go straight down. So if you want that, of course, if you wait for all the confirmations like this one, the chance is that it will go straight down. But there's also a chance that it maybe makes a little down move, then goes up again, and then starts falling. So when a harmonic actually starts falling, is like in this case, it's a sell start falling, or in a buy starts growing. You never know. The software also doesn't know. Like what we know is that all the parameters for this shark pattern are right. It was found before, it's found again, and it can still be a little bit of an extended shark. So you never know that. That's why you watch your entry point, you calculate your stop loss yourself, and you make sure that you are risking a certain amount that you're okay to put your stop loss. So if you take a certain amount of lot size that you're okay with to lose 75 pips, you need to calculate that for yourself. So that's how it works. Good. I'm going to give one last example, and then I am going to stop the recording just to have an idea. This is a very nice one. So what you see here is that this is also a 1 hour pattern, but the 1 hour pattern is in a very short period of time. So if I'm measuring point C to D, this is just a 15-hour pattern, not like a 4-day pattern. So when I see a short 1 hour pattern, I'm changing back to 20 Bollinger Bands. You can leave 7 and 533 here. You actually see that the Bollinger Bands will go to take profit 3 level, and I would take the trade when it's in the Bollinger Bands, check. It was oversold going down, check. It was crossing on Stochastic for a downtrend, check. So where are we going? We take a short position at the current price. We are going for the bottom, target 3. I need to zoom out a little bit because it gives me a very big one. Very big, long trade. So actually it will not take that long. Okay, so I'm zooming out a little bit. I can draw the line here to crop it. So here you see our target is 31 pips. It's quite a small trade for the 1 hour chart, but it is still a Gartley pattern. If we check the Australian dollar, New Zealand dollar, it's maybe also active to be found on the 15 minutes. So I would go, let's say, for 30 pips. I would take half of my price as a stop loss level. I check if my stop loss is more than out of the Bollinger Band, so that if it's kind of touching there, it will not directly stop me out. And it's actually the original stop loss level, 1 to 2 with take profit 3. That's it. This is actually a very, very nice trade to take, and it's not expected to take so long. Point C to D was just 15 hours. So within 14 to 15 hours, expected to actually hit this target. So I all hope that you got like some basic info about how to use the Harmonic Scanner, how to use it with some different extra indicators. In the indicator list is a lot more to add. So if you really like to use MACD, or if you really like to use different other indicators, feel free to add them and combine the harmonic patterns, as in the first confirmation, combine them with other indicators to give you extra confirmations. No strategy has just one confirmation. So you want at least the RSI confirmation, that's number 2. Bollinger Bands would be 3, Stochastic would be 4. That's what I really personally like to use, and using this way, taking only the trades that are having these different confirmations, we really have a high win rate. So let me know when you have any questions. My details will be in the bottom of the video, and in the comments of the video, just let me know if you have any questions, and I will be more than free to help you and to answer them. I want to thank you for watching and hope to see you soon.